the Friday Takeaway. Happy Chinese New Year, folks. And this week, we look at some dark horses, namely Sapura Energy and Media Prima. But we need to start with... Asian markets had a kind of a mixed week because trade talks between the US and China are set to resume next week. And so far, the indication is okay, I suppose, because both are keeping tight-lipped. But still, TikTok. More interesting was massive movement at SoftBank on Thursday after CEO Masayoshi Son announced a massive share buyback of 112 million shares worth approximately 600 billion yen after it announced extremely strong earnings. The buyback, according to reports, was the result of Son's view that SoftBank shares are, in his own words, chronically undervalued. The day the deal was announced, the shares went up 17%, and as expected, there was some pullback, but essentially, Sun turned $5.5 billion into $17 billion. US President Trump gave his much-delayed State of the Union address, which started with unity but ended with a call not to investigate him. But more interesting this week was Federal Reserve Chairman Jerome Powell saying that the biggest challenges in the coming years will be income inequality and sluggish productivity, emphasizing that proper policies must be put in place to right these issues. It was a fairly quiet week back home, but hey, rumors never take a holiday, and the most persistent was that of a cabinet reshuffle post-CNY. But PM Tun Dr. Mahathir Mohamad dismissed the rumors, saying there was no such thing, and he will stick to our current cabinet lineup. HLIB research says the government's plan to ban Android TV boxes would be a positive catalyst to the lackluster media sector, especially for Astro Malaysia. HLIB says this move could possibly halt, or at the very least slow down, the declining premium subscriber base and lift ARPU. This week, as the market takes a break, we take a look at a couple of what can be called dark horses who have seen their share prices battered for a number of reasons. First up, Sapura Energy, which has seen its share price touch record lows following its rights issue. But many are saying that it is at bottom, but this has been said before, so is it really only up from here? Secondly, we put Media Prima in the spotlight because the company has been loss-making for years, but it seems determined to give itself a clean slate. Too little too late though? So, let's dig deeper. One of the largest listed oil and gas players on the bourse, it is a global O&G services and solutions provider with a presence in over 20 countries. It came about actually as the result of a merger between Sapura Crest and Kencana. At the helm, experienced oilman Tan Sri Syahril Samsudin. Sapura's share price for one, its rights issue for another. Sapura's most recent rights issue was undersubscribed, which according to Syahril was due to cloudy conditions in the market, namely whether oil recovery was truly happening, which impacted investor sentiment. And the share price tanked after its rights shares, warrants and RCPSIs started trading on the last day of January. Look, fundamental-wise, the company has a 19.4 billion ringgit order book. It is one of Saudi Aramco's 4 new long-term agreement program contractors. It is a behemoth, but investors don't seem to be biting. The share price still remains at record low levels. Over the past year, it has lost more than 60% of its value. Syahril once joked a while back that Sapura was one of the biggest debtors in town, but now with the rights issue money of 4 billion, net gearing is expected to drop from 1.74 times to 0.62 times, a healthier balance sheet, so to speak. Then yesterday, Sapura and its Austrian partner OMV said that it's aiming to triple crude output by the end of 2020, while at the same time looking to reduce cost of production. And Pemodelan Nasional Berhad remains firmly in Sapura's corner, defending it as one of its core holdings and is now the single largest shareholder with a 40% stake. According to Bloomberg data, a large number of analysts are firmly buy or outperform for Sapura. The rest of the calls are actually hold. If you go by the latest 4 reports, 2 are buy, 2 are hold, and target prices range from 30 cent to 46 cent. Media Prima, in its own words, is an integrated media company with presence in TV, print, radio and advertising. To the layman, it is the owner of New Straits Times Press, TV3 and TV7 and big billboard advertising firm Big Tree. It's no secret that Media Prima has been going through tough times, if the last 2 years of losses were any indication. It is a sign of the times though, key traditional media divisions, namely TV, publishing, all showing declining revenue as ADEC spending drops and turns in favour of more digital platforms. Huang Capital reiterated its sell call and cut its target price to 30 cent, saying that there is no immediate turnaround in sight for the company, with the bright spots, namely the non-core biz and the digital stuff, unable to compensate for the drops. And Media Prima has already announced its MSS, and Huang expects further manpower rationalization as it sees the current staff strength as way too high. Currently for TV, staff is around 700, while the staff for publishing is around 1,300. Media Prima has initiated a string of transformational changes, with Tonton tying up with YouTube and Dailymotion, revamping its radio business, and Rev Asia's partnership with Mashable. And based on data from US-based Comscore mobile metrics, Media Prima is actually the most popular choice for mobile content among Malaysians. Yes, more popular than Google and Facebook. Current valuations put Media Prima at about 0.79 times book, and if you take a look back at the time of 2008-2009 financial crisis, it was trading there about 1.7 times book. Afin Huang isn't the only one with a sell. Data from Bloomberg shows that the recent calls on Media Prima are either hold or sell. And based on the most recent reports, the target prices range from 41 cent to 29 cent on the lowest end. Media Prima's share price has been fairly flat over the past year, trading within the 30 cent to 40 cent range, but nowhere near the 61 cent it was 12 months ago.